What's up, everyone? This is Eric with Option Edge, and tonight I'm doing a little self-education. Just like you, I like to learn on YouTube about different strategies and different ways to make money and just how to become a better trader. And I fell upon a guy who's got a pretty good following, teaches about options and stuff like that. And in his video, he talks about using a strategy. Basically, in Neo, he builds an iron condor. Okay, I'll just zoom in here or zoom along here. He builds an iron condor with basically 5 days to expiration and super tight. Current stock price is at $40. He sells one strike out of the money, buys behind it, one strike out of the money, does the same thing on the put side. And let's zoom along here, and you can see that he's built up a little iron condor strategy that has a max loss of $18 with a max profit of $82. And so that sounds really good and all, but you got to remember with the market, there is no free lunch. I mean, sometimes there can be when you're talking about skew and sometimes the options aren't priced perfectly. But I wanted to go ahead and back test this strategy. Okay, now this is a different date. I'm going to be using different strikes. The stock is Neo is currently trading more closer to $30, and I wanted to use my back tester to see if we just replicate this trade over and over to see what the percent win would be. Because remember, the higher the risk reward, the lower the probability. So this trade has a very low probability of happening. That's why the profit is so much. Okay, so let's go take a look. All right, so I built a little iron condor myself using the same type of idea. I'm a little bit further in the expiry is a little bit. It's about the same expiry, about a week out. Stocks trading at 29.5. So I made a iron condor as tight as possible, bracketing the current net price. Our break evens are $20, $29, and $30. Just $1 wide break even. Or excuse me, that's the max profit. We're almost $2 for our break evens on the side here. You can see that here, 28.26 and 30.74. So let's get to it. Let's look at each one of the deltas here. Okay, we're looking at the call options. So that's got a delta of 42. Okay, so I'm going to write these down. And that's got a delta of 31. So 42 and 30. All right, so that was the calls. Let's look at the puts. So we're looking at, let's round that up to 44, the delta there. And let's look ahead here. 31, we'll call it 31. All right, so we're going to build this out in my backtesting software called Trade Machine. Let's go ahead and start. So we're going to initially short a call that was 42 delta. Okay, let's go ahead and add that. Then behind that, we're going to buy the 31 delta, also 8 days to expiry. Now let's switch over to puts. We're going to short a put at, I believe we're at 44 was the puts. Add that, and then let's go long a put that's at, what was that, 31 also. And let's set it and forget it, and then I got to put in the proper days. So we got this iron condor. We'll see how this works out. Well, actually, that worked pretty well. All right, so let's go through the math here, and we'll look at how good of a trade this is. All right, we're back in Robinhood. So I just want to look at our max profit versus max loss and just do a little calculation. So we're going to risk $26 to make $74. Basically, max reward, we're making about max reward is going to be almost 3. It's about 2.84. Okay. All right, real quick, I just ran over to Tasty Trade to look at my probability of profit. So our probability of profit for making money, making a single cent for this trade is 1 out of 5 or 20%. Okay, so 1 out of 5 is the theoretical probability of profit. Okay, let's go back and remember, if we're going to be making profit 1 out of 5 times, yet making profit 1 out of 5 times, yet where our return is going to be just under 3. So theoretically, based on just the numbers, we don't have an edge. In fact, if you're just looking at the probability, we're going to lose 4 out of 5 times and only make we'll make less than three times invested. So that's a losing strategy. But however, let's go over to the backtesting software. However, historically, instead of being theoretically being 20%, winning only 20%, we're winning 70%. That's actually a huge edge. So I came in to make this video to sort of show that this guy is just showing you, he's just showing you a high risk to reward. Meanwhile, the probability of profit is very, very low, so that in the end, you really don't have any edge. But after doing some just historical analysis, it looks like this trade does have an edge. All right, so maybe I'll be incorporating some of these real tight, low probability iron condors into my trading repertoire moving forward. So interesting stuff. All right, that's it. If you like the stuff, like and subscribe. And as always, this is not financial advice. Peace.